All right, so are you ready to dive in? Today we're taking a closer look at bond vigilantes.
Ooh, bond vigilantes.
Sounds a little bit dramatic, right?
Yeah,
But they can actually have a pretty big impact on global markets,
absolutely.
especially if you're into Forex or gold trading.
Yeah, especially for those traders out there. Bond vigilantes are definitely something you need to be aware of.
Okay, so first things first. Who are these bond vigilantes?
Well, you can think of them as kind of like the watchdogs of the bond market.
Okay.
They're these big investors,
All right.
the ones who are really driving the bond market.
Gotcha.
And they're constantly scrutinizing what governments are doing. How much are they spending? How much are they borrowing?
Right, making sure they're keeping things in check.
Exactly. And if they see a government getting a little too reckless with its finances, they're not afraid to step in and make their feelings known.
Okay, so how do they actually do that? I mean, do they write a letter to the finance minister or something?
No, they don't write letters. They hit them where it hurts, right in the interest rates.
Ooh, that sounds painful.
It can be. What they'll do is they'll start demanding higher returns on government bonds.
Go.
And that makes it way more expensive for governments to borrow money. It's like they're saying, hey, if you're going to be risky with our money, we're going to make you pay for it.
So it's kind of like they're imposing their own form of fiscal discipline.
Exactly. They're the enforcers.
I like that, the
Yeah.
enforcers. So do you have any real-world examples of how this actually plays out?
Oh, yeah, definitely. Remember what happened in the UK back in 2022?
Oh, yeah, things got a little crazy over there.
Yeah, the government announced those big tax cuts and decided to borrow a bunch more money.
Okay.
Well, bond investors saw that as a huge red flag. They were like, wait a minute, this is going to lead to inflation. This is unsustainable.
So what did they do?
Well, they basically revolted.
Really?
Yeah. They started dumping UK government bonds, and when everybody starts selling, prices plummet.
Okay, so bond prices go down. But I thought lower prices were a good thing, right? It means you
Yeah.
can buy more.
That's true for a lot of things, but bonds work a little differently. See, when the price of a bond goes down, it means the yield goes up.
The yield.
Yeah. The yield is basically the return an investor gets on that bond. And when yields rise sharply, it means investors are worried about risk.
Okay, so they want a bigger payoff for taking on that risk.
Exactly. In the UK's case, borrowing costs for the government went through the roof.
Oof, that's gotta hurt.
It did. The British pound took a nosedive,
Oh, wow.
and ultimately the prime minister ended up resigning.
Talk about market power.
Yeah, it was a real demonstration of how bond vigilantes can flex their muscles and influence an entire country's economy.
That's pretty intense. I bet a lot of Forex traders were paying close attention to all of that.
Absolutely. These kinds of events can really shake up the currency markets.
So it sounds like understanding bond vigilantes is pretty important for anyone trading Forex or gold.
It's absolutely crucial because what they do can send ripples through the entire global financial system.
Okay, I'm hooked. Tell me more. How exactly do they affect these markets?
All right, let's start with Forex. You see, the yields on government bonds are directly tied to a country's currency value. So if bond vigilantes push up yields because they're not happy with the government's economic policies, it can actually weaken that country's currency.
So for someone trading Forex, that means they could potentially capitalize on that, right?
Absolutely. It could be a sign to short that currency. But of course, you always have to look at the bigger picture, all the other economic factors at play. Bond vigilantes are just one piece of the puzzle.
Gotcha. Now, what about gold? Where do bond vigilantes fit into that?
Well, gold is often seen as a safe haven asset, right?
Right. When things get uncertain, people flock to gold.
Exactly. And when bond vigilantes start making moves, it often signals that investors are getting nervous about the economy. They're losing confidence in traditional investments like bonds.
So they turn to gold to protect their money.
Exactly. It's a flight to safety. And that can drive up the price of gold.
So if you're a gold trader and you see bond yields climbing, that could be a good time to buy.
It's certainly a factor to consider. Of course, you always want to do your due diligence and look at all the other market indicators. But bond vigilante activity can be a valuable leading indicator.
Okay, this is all starting to make a lot of sense.
Yeah.
But have bond vigilantes always been around? Or is this a new phenomenon?
The term itself was actually coined back in the 1980s.
The 80s? Big hair, shoulder pads, and bond vigilantes.
That's right. It was a time of high inflation in the U.S. and investors were getting really fed up with what they saw as excessive government spending.
So they stepped in to try to rein things in.
Yeah, they pushed back hard, driving up interest rates and forcing the government to change its fiscal policies.
Makes sense. But I feel like things were pretty quiet for a while after that.
You're right. After the 2008 financial crisis, central banks around the world started these massive bond buying programs.
Right, quantitative easing.
Exactly. They were essentially flooding the market with money to keep interest rates low.
And that kind of put a damper on the bond vigilantes, right?
It did. For a while, it seemed like central banks had everything under control. But those kinds of interventions can't last forever.
So what happened? Why are bond vigilantes back in the spotlight now?
Well, a few things have changed. First of all, we've got this surge in inflation happening globally.
Yeah, inflation has been a big problem lately.
It has, and it's partly due to the pandemic, the war in Ukraine, all sorts of factors. But it's making investors really wary of holding bonds because inflation erodes their returns.
Makes sense. Nobody wants to see their money lose value. But is that the only reason for their comeback?
No, there's another big factor at play here, and that's the sheer amount of government debt out there, especially in the U.S. It's ballooned to unprecedented levels.
So investors are starting to get worried about whether governments can actually pay all that money back.
Exactly. It's like a double whammy. Inflation eroding their returns and fears about governments defaulting on their debts.
No wonder they're getting nervous.
Yeah, and that brings us to a key difference between the bond vigilantes of the 80s and today. Back then, they were mainly focused on inflation. But today, it's the mountain of debt that's keeping them up at night.
Okay, so bond vigilantes, they're back, they're worried about debt, and they're not afraid to shake things up. This is all fascinating stuff, but I have to ask, why don't they intervene all the time? If they have so much power, why don't we see them flexing their muscles more often?
Oh, that's a great question. It's important to remember that bond vigilantes aren't some organized group with a single agenda.
Right.
They're individual investors, each with their own goals and risk tolerance.
So sometimes their interests might actually align with what the government's doing.
Exactly. And sometimes they might just decide to sit on the sidelines and see how things play out. It really depends on the specific circumstances.
So they're not always the bad guys.
Not necessarily. Think of them more as a reflection of overall market sentiment. If investors are feeling good about a government's economic management, bond vigilantes are probably going to stay quiet.
But if doubts start to creep in,
That's when they can become a real force to be reckoned with.
all right, so bond vigilantes, they're powerful, they're unpredictable, and they're definitely worth keeping an eye on. But I'm really interested in diving deeper into what this all means for our listeners who are actually trading Forex and gold. So in the next part of our deep dive, let's get into the nitty-gritty of how you can use this knowledge to your advantage.
Sounds good. Let's do it. All right, so let's say you're a Forex trader. You're sitting there watching the charts, and you see the yield on the U.S. 10-year Treasury note starting to climb. What do you do?
Uh-oh. Sounds like the bond vigilantes are up to something. What should I be looking for?
Well, first things first, don't panic, right? You need to look at the context. Is this a gradual increase, or is it a sudden spike?
Okay, yeah, that makes sense. So I can't just react to the yield itself.
Right. You got to look at the bigger picture, what's been happening with U.S. economic data. Are there any policy announcements, geopolitical events, anything that could be spooking investors?
Gotcha. So put on my detective hat and look for clues.
Exactly. Let's say inflation data comes out and it's hotter than expected, and then the Federal Reserve hints that, maybe they'll raise interest rates again.
Oh, that doesn't sound good.
Not really. Bond vigilantes might see that and think the government's losing control of inflation.
Okay.
So they start dumping U.S. Treasuries, which pushes yields even higher.
Okay, so rising yields, and it looks like the U.S. economy might be headed for trouble. What does that tell me about the U.S. dollar?
Well, if bond vigilantes are losing faith in the U.S. economy, foreign investors might start thinking twice about holding dollar-denominated assets.
Okay, less demand for dollars.
Right, and less demand usually leads to a weaker currency.
So, in that scenario, a smart Forex trader might think about shorting the dollar, maybe against the euro or the yen.
That's one possibility. But Forex is complicated, right? You got to factor in other things too, like interest rate differentials, economic growth, political stability, all that stuff.
Right. Bond vigilantes are just one piece of the puzzle.
Exactly. But they can be a pretty important piece.
Totally. So it's like they're giving us a sneak peek into how the market really feels about a country's economy.
That's a great way to put it. Now let's switch gears and talk about gold.
Okay, yeah, gold, that's always a hot topic.
Yeah.
especially when things are uncertain.
Absolutely. And that's where bond vigilantes come in.
Okay, I'm listening.
Think about it. When bond vigilantes get active, it usually means there's a broader sense of unease in the market.
Like a storm's brewing kind of feeling.
Yeah, exactly. Investors start to question the stability of their investments like bonds and stocks, especially if they're worried about things like inflation or a potential recession.
So they start looking for somewhere safe to put their money.
Exactly, somewhere safe. And gold has historically been that safe haven.
Okay, yeah, it's like the classic safe haven.
Right. So when bond vigilantes are pushing those yields up because they're lacking confidence in the economic outlook, it can trigger that flight to safety that we were talking about.
Makes sense. So more demand for gold, which would push up the price.
Exactly. It's something to watch out for if you're a gold trader, for sure.
Absolutely. Okay, so this is all fascinating, but how can a trader tell the difference between a normal fluctuation in yields and a move that's being driven by these bond vigilantes?
Right. Good question. You have to look at the speed and the size of the yield change. If it's a gradual increase, it could just be normal market movements. But if you see a sudden sharp spike, that could be the bond vigilantes making a statement.
Ah, okay, so it's all about the suddenness and the size of the move.
Exactly. And keep an eye on which types of bonds are being affected. If short-term bond yields are rising, it might just be central bank policy at work. But if long-term yields like those 10-year treasuries are climbing sharply.
That means the vigilantes are worried about the long term.
You got it. They're not just worried about the next few months, they're worried about the next few years.
Okay, that makes sense.
Yeah.
And that's a bigger deal for traders, right?
Yeah.
Because it signals a fundamental shift in how the market feels.
Right. Now, we've talked about how bond vigilantes can impact Forex and gold. But how can traders actually use this knowledge to make better decisions?
Yeah, let's get practical. What are some specific strategies they can use?
All right, so let's start with Forex. One approach is to use something called bond yield differentials.
Bond yield what now?
Bond yield differentials.
Okay.
It sounds complicated, but it's actually pretty simple. It's just the difference in yields between bonds from two different countries.
Okay, give me an example.
So let's say the yield on the U.S. 10-year Treasury is way higher than the yield on the German 10-year bond.
Right.
That means investors are demanding a higher return to hold U.S. debt.
So they think the U.S. is riskier than Germany.
Right. And that difference in risk can affect how currencies move. If the yield spread between U.S. and German bonds gets wider, it could mean the dollar is going to weaken against the euro.
So by watching those yield differentials, a Forex trader could get ahead of the curve and anticipate those currency moves.
Exactly. It's not a foolproof system, but it's a useful tool.
Awesome. Now what about gold? What kind of strategies can gold traders use?
Well, one way to think about it is to use bond yields as a kind of fear gauge.
A fear gauge. Interesting.
Yeah. When bond yields spike up, it often means that investors are getting really worried about things like inflation or economic instability or even geopolitical risks.
So the same things that make people want to buy gold.
Exactly. Those are the classic drivers of gold demand.
Okay, so if I'm a gold trader and I see those yields shooting up, that could be a sign to buy gold because the price might be heading higher.
It's definitely something to consider. But remember, correlation doesn't always equal causation.
Right. Just because two things happen at the same time doesn't mean one caused the other.
Exactly. So you have to look at the whole picture, the broader economic context, the geopolitical situation, even technical factors within the gold market itself. Bond vigilante activity is just one data point.
One important data point, though.
Definitely. Okay, so we've covered a lot of ground here, but before we move on, is there anything else traders should keep in mind when they're trying to read the signals from these bond vigilantes?
Yeah, a couple of things. First of all, remember that bond vigilantes aren't perfect.
Right, they don't have a crystal ball.
Nope. They can be wrong just like everyone else, so don't blindly follow their lead. Do your own research, your own analysis.
Don't just jump on the bandwagon, think for yourself.
Exactly. And secondly, watch out for false signals. Sometimes bond yields might rise for reasons that have nothing to do with bond vigilantes. It could be something the central bank is doing or just some weird technical thing in the bond market.
Okay, so filter out the noise and focus on the signals that really matter. Right. And finally, always manage your risk. Trading Forex and gold can be volatile, even if you think you know what's going on. Don't bet everything on one trade, no matter how sure you are.
That's great advice. It's always good to be reminded that trading involves risk, even when you have all the information.
Absolutely. All right, I think we've done a pretty good job of explaining how bond vigilantes can impact Forex and gold traders. What do you think?
Yeah, this has been super helpful. We've gone from Bond Vigilantes 101 to an advanced seminar in no time.
Right. It's a fascinating topic.
It really is. But I'm curious to hear your thoughts on the bigger picture. What does the resurgence of Bond Vigilantes tell us about the future of the global economy? I think it's time to wrap things up and explore that question.
Yeah, let's do it. Let's talk about what it all means for you.
All right, so we know Bond Vigilantes are back and they're making a splash, especially for Forex and gold traders. But what does their resurgence tell us about the bigger picture? Like, what does it mean for the global economy going forward?
That's the big question, isn't it? I mean, if bond vigilantes are getting more and more active, even pushing back against governments and central banks, it suggests that there's some growing unease, about the stability of the whole global financial system.
So we're not just talking about individual trades or market moves anymore. It's something bigger.
Yeah, it's about the fundamentals. Think about it. We've had all these years of super low interest rates and governments spending like crazy.
Yeah.
Now inflation is up, debt is through the roof, and investors are starting to wonder if the whole thing's going to come crashing down.
Okay, so that's a little unsettling. So if you're a trader, how do you deal with that kind of uncertainty?
Well, first you got to accept that things are going to be volatile, probably for a while.
Yeah.
Days of easy money and predictable markets, those might be over.
Gotcha.
So that means your risk management has to be top-notch.
Don't get caught off guard if things change quickly.
Exactly. And second, you got to stay informed. Keep your eye on the economic data, policy changes, geopolitical stuff, all of it.
Right.
And of course, watch those bond vigilantes.
They're giving us clues.
Yeah, their actions can tell you a lot about where the market might be headed.
So they're like our early warning system.
That's a good way to think about it. And third, be ready to adapt.
Okay.
Don't be afraid to change your trading strategies as things evolve.
Makes sense.
What worked before might not work now in a world with higher inflation and all this bond vigilante activity.
This is really making me rethink how I approach the markets. It's like I need to step it up, be more careful, more analytical.
I think that's smart. Bond vigilantes are making all of us better investors in a way.
How so?
They're reminding us that markets aren't always rational or predictable, and if you get complacent, it can cost you.
So instead of being afraid of bond vigilantes, we should see them as a challenge.
I think that's a good attitude. They can shake things up for sure, but they can also be a force for good. By pushing back against policies that aren't sustainable, they might actually help to create a more stable financial system in the long run.
That's an interesting way to look at it. It's like they're the market's immune system, fighting off the stuff that could cause bigger problems later on.
I like that analogy. At the end of the day, whether you see bond vigilantes as heroes or villains, you can't ignore them. They have a real impact. And if you're trading Forex or gold, understanding how they think and what they might do next could be the key to surviving and thriving in the markets.
This has been a really eye-opening deep dive. We've learned who bond vigilantes are, how they work, and why they're important. We've seen how they've impacted markets in the past, how they're coming back into play now, and what that could mean for the future. And we've even gotten some practical tips on how to use all this knowledge to make smarter trading decisions.
It's been great talking about all of this with you. Remember, knowledge is power when it comes to trading.
Absolutely. So to everyone listening, stay informed, stay vigilant, and as always, happy trading. We'll see you next time for another deep dive.